Welcome, savvy side hustlers and full-time freelancers. The gig economy is booming, offering incredible flexibility and earning potential. But with great freedom comes great tax responsibility, and 2026 is bringing some critical updates you absolutely need to be aware of.
We're calling it the gig economy tax bomb because without proper preparation, you could face unexpected bills and penalties. In this video, we'll demystify the key tax changes and strategies for 2026, helping you navigate the system like a pro.
First, let's acknowledge the incredible growth of the gig economy. Over 70 million Americans were freelancing in 2025, and projections suggest freelancers could make up over 50% of the U.S. workforce by 2027. Globally, the gig economy is a massive force, estimated to reach over $2 trillion by 2034. This rise brings both opportunity and, yes, a more complex tax landscape. The biggest shift for many is understanding the difference between being an employee and an independent contractor. As a gig worker, you're often considered self-employed, meaning you're responsible for taxes typically split with an employer. This includes the self-employment tax, which covers Social Security and Medicare. For 2026, the self-employment tax rate remains at 15.3% on your net earnings. Of this, 12.4% goes towards Social Security, applied to earnings up to a wage base of $184,500 for 2026. The remaining 2.9% for Medicare has no wage cap. Remember, you get to deduct half of your self-employment tax when calculating your adjusted gross income. One of the most talked about changes for gig workers has been the 1099-K reporting threshold. After much back and forth, new legislation, known as the One Big Beautiful Bill, has reverted the federal 1099-K reporting threshold. For 2025 and beyond, payment apps and marketplaces are generally required to issue a Form 1099-K only if your gross payments exceed $20,000 and you have at least 200 transactions. This reverses the prior intention to lower it to $600. However, it's crucial to remember, even if you don't receive a 1099-K or 1099-NEC, all your income from gig work, no matter how small, is still taxable and must be reported to the IRS. Many states also have their own 1099-K reporting thresholds, some as low as $600, regardless of the number of transactions. So you might receive a state 1099-K even if you don't meet the federal criteria. Always check your state's specific rules. As a self-employed individual, you're expected to pay estimated taxes throughout the year, typically in quarterly installments. Failing to do so can result in penalties. This is often a significant adjustment for those transitioning from traditional employment where taxes are automatically withheld. Set aside a portion of every payment for taxes to avoid a nasty surprise. The good news is that gig workers can deduct legitimate business expenses, which reduces your taxable income. This is a huge perk you don't get as a W-2 employee. Vehicle expenses are a big one, especially for rideshare or delivery drivers. You can choose between the standard mileage rate, which for 2025 is 70 cents per mile, or tracking actual expenses. Many find the standard mileage rate simpler and often more beneficial. Just remember to keep meticulous records of your business mileage. If you work from home, the home office deduction can save you money. You must use a portion of your home exclusively and regularly for business. This allows you to deduct a percentage of rent, utilities, and other home-related expenses. Don't forget other common deductions: cell phone and internet bills, business portion, software subscriptions, necessary equipment like laptops or specialized tools, and even professional development or training. The Qualified Business Income, or QBI, deduction, also known as Section 199A, is still in play for 2026. This allows eligible self-employed individuals to deduct up to 20% of their qualified business income. Also for 2026, a new non-itemizer charitable deduction, allows you to deduct up to $1,000 in cash donations for single filers or $2,000 for married filing jointly, even if you don't itemize. Meticulous record keeping is your best defense against tax season stress. Keep digital or physical receipts for all income and expenses. Consider using accounting software or a spreadsheet to track everything in real time. It's also wise to open a separate bank account for your business income and expenses. This simplifies tracking and clearly separates personal and business finances, making tax time much smoother. While this information is a great starting point, tax laws are complex and can change. For personalized advice, especially if your gig income is substantial or your situation is unique, consult with a qualified tax professional. They can help ensure you're taking all eligible deductions, complying with all regulations, and potentially identifying strategies to minimize your tax liability for 2026 and beyond. Don't let the gig economy tax bomb catch you off guard. Start preparing now. Track your income, save for taxes, and know your deductions. Your future self will thank you. If you found this video helpful, please give it a thumbs up, share it with fellow gig workers, and subscribe for more essential financial advice. We're here to help you thrive in the evolving gig economy.